Good morning, Richard. Thanks very much for joining us on Blue Notes. You've just published this report, Servicing Australia's Future, and it's about how the Australian economy is going to develop over the next couple of decades and with a focus on the services sector. It confirms that Australia's economy will be more services oriented by 2030, but you're actually saying as the Australian economy evolves, labour is something we're going to be short of.
Look, the labour shortage argument I think focuses on the technological piece alone without looking at the broader picture and what else is going on. And it's not like technological advances are new. A third of agricultural workers in the 19th century lost their jobs because of the invention of more automated processing machines. So if we think about the process in a similar way, their solution was more education and more training into trades and crafts and manufacturing. And for us, the trades, crafts and manufacturing are more likely to be in the service sector than in the goods producing parts of the economy. Also, you have a demographic shift with the ageing of the population, and the numbers of the population who are 65 and over will increase about 60% over the time of the report. Those two forces together, we think, will create quite a large change in the Australian labour market.
And there's a lot of talk alongside this about infrastructure requirements, the infrastructure investment that the Australian economy needs to grow. But given how you see this playing out, are we talking about the right kind of infrastructure? Is it infrastructure that will help services like education, aged care, professional services?
Look, I certainly think we need to think a bit more about what we're doing in terms of infrastructure, and it probably will change. But of all the issues the report raises, it's probably the least worrying, and I say that for two reasons. One is governments are focused on infrastructure, and in most states, if not all states, and at the federal level, it's perceived as a bit of a vote winner at the moment. And the second issue is it's one of the few physical investments which business and asset managers still seem quite keen to fund. We think over the next 5 years you've already got more than $40 billion of infrastructure investment in the pipeline. It will change form, but I think we'll be pretty well served on that front.
So you talk in the report about the services sector being less capital intensive, which makes sense. You're not spending billions on big mines and things like that. But what does that imply for the economy, that services are less capital intensive?
So it's a key argument behind our call that the relative demand for labour actually is going to be quite strong, which we spoke about earlier in the discussion. But what it also means is the financial sector is going to have to adjust a little bit. If you like, less investment bankers, more retail bankers. Businesses themselves are likely to need to think a bit more differently about their own internal management. Often, for instance, the head of the finance department is viewed as the natural 2IC to the CEO. Actually, the head of the human relations department might start to generate a bit more internal clout because of how important talent is to the performance of the firm. Obviously, the labour piece also implies education is a bigger focus, and there's definitely some things Australia can do both in closer connectivity between the tertiary sector and the business sector, but also using the ideas we generate. And I think it's going to put more of an onus back on the government to shift the way it thinks about the economy away from an economy that kind of produces staff and one that uses people as a main input to the process.
And you do note in the report that there's sort of nascent signs that this shift in the economy towards labour is starting already.
Look, you can definitely see it now, and in fact, if you think about kind of some of the puzzles around economically at the moment, not just in Australia but other countries, relatively modest GDP growth but relatively solid and consistent demand for labour, coupled with relatively low inflation and yet credit demand remaining lower than normal.
Thanks very much for your time with Blue Notes. Good luck with the report. Thanks, Richard.
Thanks very much.